Yeah, today we're actually going to identify some of the basic crosses in the trading. Most of the basic crosses that have a lot to do with trading. And this scenario today, we are going to look at USD JPY. We're going to look at USD JPY. Take a look at what happened all the way from here. You can see the basic crosses. At this junction, look at what happened. This is the daily USD JPY. The market actually crossed beyond the 200 EMA. Unfortunately, got into weak resistance, failed to cross it, and that's why I seeing a pullback. So at this point in time, they are expected to see another weak support around this zone. Yes, expect to see another weak support around this zone. And as soon as you see the weak support around this zone, this is where the market is expected to get to before the market will actually resume back to start buying. Currently, the USD JPY is bullish in nature, so you should always look for opportunity to go long. And when we talk about going long, we are talking about buying more and more deep. So even though it tries to break down, just a kind of a brief analysis on the current USD market, even though it's trying to go down to the weak support, it's just for the meantime. As soon as it get to this level, expect it to go up beyond the current week support, because we're actually looking at the daily chart, and here you have the 200 EMAs. You can see what happened here. A cross of the 200 EMAs get deep down to unverified support. You are seeing here. Then from unverified support, you see that the market actually rose up again, crossing a bit of the 200 EMA and actually getting down to the support resistance before the current market situation we are actually experiencing now, seeing the market actually having a pullback. So the major thing is that for you to identify areas to actually trade on a weekly chart, and what is the expectations when the market crosses a certain channels. Now look at what happened here. 200 EMA have been broken on the daily chart. And what happens? Expect it to trade down to a weak support, and get it down to this weak support, expect it to go back beyond this current week's resistance, because definitely what you should expect from the market right now is that this market will break back. It will break back. So each time the market actually crosses, look at what happened from here. It crosses the 200 EMA, it get deep. Now each time it crosses the 200 EMA, it's going more than expected, and that is the market for you. So each time you're actually trading the market, you need to look at your crosses, which is the 200 EMA, which plays a bigger role. All those things you see here are just indicators to actually help you to trade successfully. And when you are trading in a daily chart, it has a long way to go.